Good day, all. Ira Epstein of Linn Associates for this Thursday, the 13th of January, 2022. And we're pushing, we're going to be just before 6 p.m. as we're getting up here. And we're talking about the financial markets. And my gosh, I'll tell you, I'm worn out. I rarely say that. I'm worn out. These markets this week have just been difficult, to say the least. When you look at them, and we will in a second here, you've been in a battle zone. You've had a lot of news thrown at you. The market's trying to digest it. The market went into a risk-on environment yesterday all day long. It followed through early today and kept it until the late noon part. And all of a sudden, it started to roll. And as it rolled, it just plain rolled over. And the market got ugly in the stock indices later on. This is still a market fighting for direction. Energy markets, they're a bit high. Wouldn't surprise me if they correct. Anybody here watching natural gas? You're up 14% on Wednesday, down nearly, 12.5% or so today. That's not normal. Bonds and notes, I thought the short side was the way to be. Today's action negates that thinking on my part. We'll take a look at that in a minute. In the grain market, rain makes grain. And they came down very hard today because you're getting rain in Brazil and Argentina temporarily. Now, whether that saves the crops or not, I don't know. But if you play, you're just never going to get rain. It doesn't work that way. So when we look at the S&P, you have had a wild week. And for the week, you're down 0.25 percentage point. That is nothing. You can see the action, though, is craziness, all right? You come in over here. This is Monday. You're down as low as 45.72. You start a rally in the market, and where did it finish up? Right there is where it finished. So you went from 45.72 to 47.39. These are big number swings, and as you can see, you're just playing back and forth. What's the trend in the market? Okay, what do you think it is in looking at that, up or down? That's why I put on swing lines. I'm not as smart as you. The swing line is saying it's down, lower highs and lower lows. You can't argue that on the pattern. But if you get away from this, and this is where we were the other day, you have a higher high and a lower low. This was Tuesday, all right? That's what you use swing lines for. They start telling you where you're at. So until the market takes out 47.39.5, the trend is down. The resistance, my gosh, it's that 18-day average, that line in the sand I always talk about. So I think the pros are going to be sellers at 47.18. The problem is if you put a risk on, it's going to be 47.39.75. That's $1,000 risk. Too much, in my opinion, to be working with there. When we look at where the market's really doing in the bigger picture, it's stuck in the Bollinger Bands in pretty much sideways action here. You're churning. This is a big churn going on in the market at this point. Momentum down, trend down, bias down. Everything right now bearish until the market takes out 47.39.5, which is a heck of a lot different than after this big break to that spike back down. Now you're able to start defining what's going on. Big change. That's important. The 100-day average isn't acting like it even matters on the Nasdaq. It did back here. It stalled for a bit, but now it's just whipping back and forth. The trend is down. Lower highs, lower lows. Not looking for an awful lot down. 15, 13, 13. Is about what I'm looking for. If the market exceeds that, then the 14,958 200-day average. You got to prove to me you can exceed it and stay under it, and you haven't done that. Let's talk the flip-flop. Let's say the market gets that risk-on mentality that comes back that we saw earlier. It was just yesterday and the day before. Crazy. If you can get over 16,009 and close over wherever the 18-day average is at that point. Right now it's 16,051. Without taking out this low, you'd actually turn bullish. So it tells me that the pros are going to sell between that 100-day average up to the 18, but it can't be the 18 because to sell that number, you're higher than that one. not the best play that you can make. In the Dow, this is still the strength of the market, but it too turned bearish. Now with today's action, an outside day down, remember, you were just in this market up 32 points, down 171 today. Yep. Now you're trying tonight to get back some of that, but the resistance is going to be the 36,117 level, and what you don't want to take out is today's highs if you're in a bear camp. So I think the bears are selling there with that risk, momentum down, seeing if they can get wherever the Bollinger Band is. That Bollinger Band could be racing at price real fast. The combination should be where the 100-day is under it, and it did that today. So to get those arms coming like that, probably what's going to happen, both from the top and the bottom. In the Russell, failure zone, we've mentioned it, but now you're too oversold. So on the next challenge of the Bollinger Band, I see the shorts covering again. The trend is down. All of the stock indices with today's action turned the trend down. The key in all of them is what happens with Wednesday's high. If that's taken out, they negate their downtrends right across the board that we're looking at. In the VIX cash, this is the battleground, the 100 in green, the 200-day average in the gray, 18-day average. You went to the upper band. I said that's where the pros would write calls looking to get back into that average. It did it. You don't have a trend here. You've got this. You just got the whipping back and forth. Whipping, understand whipping, look at it, and know when to walk away from a market. This is a walk away from a market play. Then we get to the 30-year bonds. And what the market did is you came down, made a lower low, and turned right back up. Uh-oh, you negated the downtrend. You now have a pattern of higher lows, higher highs. What about the embedded reading? You have a reading of 25. You closed with a 22. The bear part of this market came to an end in momentum. If I got them the day before, you were embedded all the way through these numbers. They were under 20. The odds favor that until you take out this low, you're going to make a run to the 18-day average. Now, it could be a combination where that number drops a bit more so the price comes to it, but that's what the odds favor now. 10-year note, identical thing. You lost the embedded reading. You're at 24, and on the close, you had a 22 reading. The way I teach charting doesn't mean that I'm right or wrong. Well, I guess it could mean that I'm wrong, right? But the way I teach it is that when you lose momentum, to correct the momentum, you either re-embed, or for that to correct, both numbers have to get up and over 30, and when that happens after embedding, it is common. I wish I could tell you it always happens. It doesn't. Does it happen a lot? Yeah, to get back to that key average. Does it happen a real lot? Yeah, that happens too. Dollar index. Well, why not the dollar down? You do realize President Biden got one thing through since he's turned president. He did get an infrastructure bill through. We don't hear a lot about it because it's going to be spent over a decade from what I understand. They have committees that get together, decide where they're going to spend and so on. He may not be president when the first monies roll out, the way his luck is going. He lost today at the Supreme Court his mandate to make companies that have 100 or more employees that they have to go get tested, blah, blah, blah. Otherwise, they could be fired, blah, blah, blah. The only thing the Supreme Court allowed was, since the federal government pays in hospitals from the Fed government grants and so on, that hospital workers have to do that. Okay. Partial win, but bigger loss, I think. What does that mean, by the way, for the private companies that want to do this? Does it open up the door to civil lawsuits, since it's not the law of the land, the mandate there? So if it's not the law of the land, I would think you open the door for the civil lawyers to come in and attack companies that don't want to let the employees go because they're not getting a vaccine. I'm not an attorney. Yeah, I did go to law school. That's the equivalent of you knowing more than me. As you can see, right through here, you're still over the upper band. You never buy over bands. Never. That's what I teach. I'll stay with what I teach. British pound, well, it's not worried about Boris Johnson so far. Remember I told you, start looking for this bullish crossover of the 18 to the 100. We'll see if that's coming. When you come over to Bitcoin, it reestablished a downtrend in an oversold condition. Anytime I see readings under 30, I filter my bearishness by seeing where the slow stochastic is, and under a 30 that's not embedded. This is embedded. That's not embedded. Let the next guy have it. I don't want my clients to go short into that type of market. In the Brent versus WTI, this is the differential. Just on Wednesday, it was at 265. Now it's at 285, and tonight 288. So the rally's coming. It probably got a little too cheap, but the $3.06 level is a lot of resistance. You're still fully embedded. Means the traders, to me, are buying these breaks in the market continually. They're buying it right here, and they're looking for those 18, they're looking for up here, the upper Bollinger Band, until you lose the embedded reading. And that's what I think is going on. Nat Gas, what do we say? This was the first move yesterday, up and over the upper Bollinger Band. You were up 9% on the day on the close here. Cash and other markets were up way more. I was watching it. Not a breakout. First day in the top part of the range. Could you get another day with it? Today you're down 7.44%. So you gave the whole thing up. This is what I call crazy action. And tonight you're pretty much unchanged. The trend is up. I think a major bottom. Major. I want to go on record until these lows are taken out. And if they're taken out, I'll say, hey, I was wrong on it. But right now, I think the pros are looking at this market, and on good enough pullbacks, when you're not overbought, I wouldn't be surprised if they want to step in on the long side. You know, the way I talk about all this, you're going to say, well, what do my brokers do? First off, they're watching what I do. They all get my written research, my videos. They're up to date on what I'm doing. They can see where we're going with it. They can call me on the phone for questions if you have them of them. And that's the whole thing. What we try to do is work with you. We are not the type of firm where you walk in, this is your commission, this is what you get. We work with you. We set commissions. Just like you go out and you buy a suit if you're male, female. You get the arms done, they pull the back a little bit, they take care of you. We tailor what we do for you. And I think that's the way you have to go in this market. I realized that you can go on and look at websites. Well, this is what you charge, this is what you get. Now you have to understand, for that, try to get hold of their margin department. You're not going to be able to. I don't care if you're self-directed. You might want to tell my department, hey, I know that I'm on margin, I need a day, work with me on this. If there's an algorithm that's doing that and you're paying some firm, they're just knocking you out of the market. There's nobody to call, nobody to talk to. They pride themselves on it. They can give you a low commission. We work with you on it. So we work with our clients, trying to give them as much leeway as is allowed under the rules, number one. Number two, help with trade ideas. Number three, placement of orders if they need that. Number four, all the different knowledge that we have, the research comes with it in our broker-assisted accounts. How do you find out? Call. Talk to one of my brokers. They'll pick up, and they'll be happy to work with you. I'm Ira Epstein. You have a great day. I'll talk to you all tomorrow.